Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. We thought we'd start with economics. Seema Shah is scary good. It comes down to London School of Economics, her tour of duty at the Bank of England, with a huge concision about what's going on. Seema, with Principal, thank you so much for joining this morning. Just to cut to the chase, Seema, do the central banks, and particularly the Fed, do they have a cogent plan, or are they making it up as they go?
Hey, Tom, that is, I think, such a good question because, we pore over where the comma is, has it moved? What is their indication? What are they thinking? How are they feeling? The truth is that they are digesting the economic data, the incoming stuff, just like we are. So I think it's right that they're making up as they go along. I mean, of course they have an idea, but they just have to respond to the data because it's just unfolding, and I don't think they have a clear idea of where things are going to go.
In your England, there's been a lot of good research with respect to how hard it is to do this business, and that as a general statement, the Bank of England and other forecasters simply were too pessimistic, and that we got wrong on a fractional basis, on a 1/10 of a percentage point basis, that growthiness was better than we expected. Do you expect that to continue, and that we'll underestimate growth among the three central banks?
So look, it's possible. I think all central banks have had, actually maybe with the exception of the ECB, which seems like it's had a kind of a more successful forecasting ability over the last couple of years. But I think it should be getting a little bit more straightforward because I think the last couple of years have been very difficult for forecasters. And I'm going to put myself in there as well. Because we've been living in, typically analysts, we look at historic data, we use that to give us a guide forward. The thing that forecasters missed in the last couple of years is that actually the economy had been fundamentally changed by COVID. The normal reaction function, interest rate sensitivity, all very, very different. And I think it's only in the last 12 months or so that everyone has started to realize that there is maybe, doing a comparison to 95 to 2007 just doesn't work as well anymore. But from here, we are starting to revert kind of normalization should be down the line, and that should make forecasting a bit easier.
So, Seema, here in the U.S., do you think we are, in fact, today experiencing a soft landing for this economy?
I think we're in the motions of a soft landing in the U.S. So, the data is fairly good. We're downshifting, which is a positive thing. The last thing that we want is actually to see economic data continuing to accelerate, because that, to me, ends up in a hard landing later down the line. But I think the jury's still out. We can't say definitively we've got the soft landing, we've achieved it, and we can be all victorious. We won't know for sure for a couple of months. And I do have worries of how the Fed genuinely lands it. I mean, let's say in the next few months, they've seen that inflation comes down, they cut interest rates, they start that path. I worry that actually what's going to happen is that if you're a homeowner and you've been waiting on the sidelines, eager to move, but holding back because mortgage rates are so high, you're going to get right back into the market. You're going to ease financial conditions, and you're going to see the market and the economy taking off. So I do worry about actually, can they do a soft landing? Can they achieve it for more than just a 3 to 6 month period?
So I guess if you're the Federal Reserve, you saw kind of January, February, March, some inflationary type of data come out, and then kind of, I guess in April, reversed a little bit. We got a little bit of, slowing down of inflation. So if you're the Federal Reserve, I guess you can make the argument that there's no reason for them to do anything other than wait.
Exactly. I mean, I think after you've had, just basic maths just tells you that if you've had 3 months of hotter than expected inflation data, you at least need 3 months of inline inflation data before you can feel any kind of confidence of going back to what your initial plan was. But realistically, given the strength of the inflation data and the continued strength of the economy, they probably want a few more months than just 3 months.
Right.
So, but as I said before, I think they are digesting the economic data. The earnings numbers coming out from Target, certainly very important in terms of figuring out where the consumer is, because that's obviously going to tie back and help them figure out what the next path is.
Seema, to take the first-rate economist Ed Yardeni over to his market call, which is a bull market wrapped around his concept of a roaring 20s. To me, roaring 20s, either the 20th century or the 21st century, is about a pop in nominal GDP. Do you at principle see a combination of real GDP and inflation that leads to an animal spirit that gets to Yardeni's roaring 20s?
So it's an interesting question. I mean, I can see nominal GDP going up mainly because of AI and tech. The roaring 20s to me was about kind of joy on the consumer side, just that relief and wanting to enjoy your life and spend it. And I think we've had that for the last couple of years. Whether or not that continues, I think is a very, very different question. And inflation is going to play into this so much that if you have got higher inflation, of course, it's boosting nominal GDP, but consumers are already feeling that retrenchment. They are struggling with it. So I'm not sure that you can actually do that direct comparison to the 20s.
Seema, thank you so much. Seema Shah, the Principal Group. Okay, I got to tell a story here. He's going to love this. So I'm at Michael's, this is 15, 17 years ago. And then, they're giving me an overpriced salad and my third drink. And it's the art directors for my book. And they're like, Tom, we have to have an inside sleeve, one of your charts, 114 charts. Which chart would be like when you open the book, you see it, inside the book cover and that. And I made the decision, over the olive on the martini, I said, it's got to be Malpass.
Yep.
Malpass is at Bear Stearns, and out of all the people in the book, and these are heavyweight, Bill Dudley, the former Fed president, Bob, the New York Fed president, Malpass had the most amazing chart, which was yen and gold, like what Dennis Gartman did. Joining us now, the former head of the World Bank and iconic at Bear Stearns, Mr. David Malpass as well. I just looked at yen in you, and credit to Dennis Gartman as well. It's the call of the decade. Weak yen that we saw, whether it's yen and gold or yen and whatever. How does Japan turn around this train wreck?
Hi, Tom. You can stabilize your currency by having a good growth plan. So Japan's got to articulate that. They're not badly positioned in the world since people are trying to diversify away from China, and Japan has a lot of the things that people want. And so if they can retool the economy, it can work.
It's an experiment of reflation, which is pretty, you're at Colorado College, and it's it's not even in the textbooks. Okay, it's an experiment in reflation, and they want to pull that back. Can they find a middle ground that works versus tripping into deflation again?
They can, but they need to really think about their interest rates. They're pushing up against the 1% limit on the 10-year bond. It really doesn't work to say you're going to limit your bond yield, but you want your currency to stop weakening. So right now they're intervening to try to tide that over. That can work for a little while, but at some point you have to say your interest rates are going to be more similar to the rest of the world interest rates.
Paul wants to jump in here. One more question on yen. What is your call on Japanese yen? I know you're not doing FX and market economists, but do you see a big figure strengthening in Japanese yen or more of the same?
I think it could settle where it is now, and the world would accept that. And that is a little bit what is going on. The world moves through currency realignments and then tries to stabilize after that and reduce the harm from that.
Paul, he's tanned and rested. Did you notice this? He's left the World Bank, and he's tanned and rested.
I know. I'm very impressed. David, we've seen, bringing it back to the U.S. here, my entire career we've been talking about annual deficits and the national debt, and now we even have Jamie Dimon, David Solomon at Goldman Sachs talking about the national debt. We've even got that silly thing downtown where they tally up the national debt on a daily basis for everybody to see. Is it time to care about that stuff? I'm 60. Do I care?
I think absolutely it is time to care. It was one thing when the U.S. economy had a 50% debt to GDP ratio. You could borrow that and not really tax the world's capital or take all of the world's capital. We're the biggest economy, and we're borrowing so much that it changes capital flows around the world. And I think it's doing it in a harmful way. It's the government gets the first dibs on all capital, and then if there's any left over, big corporations get it through the bond market. And if there's any left over, which there isn't really, small businesses can borrow to fund their inventory, their working capital, and countries outside the U.S. have a little bit of capital at the end of the line. That's not a workable system for the world. So I think there has to be, both in the U.S. and in the world, an urgency that the U.S. government stop growing its spending.
And this is, I guess, a political issue. And again, in my lifetime, I've never seen the political will to address it because it doesn't sound very popular.
That's right. And I think there's a big gap in our law. You know, the debt limit law is misnamed. It's really the debt increase law. So every couple of years, presidents, both parties, sign a law to increase the debt limit. We have to replace it with something workable, strong, and it has to hurt Washington, not hurt the people of the country when we have too much debt.
David,
they shut the national parks rather than reducing the staff hiring in D.C. The swamp gets bigger every time.
Oh, listen to you. You leave the World Bank and it's a swamp now? You worked in the swamp for 3 years. What'd you learn working in the swamp?
So Washington is a swamp. All the parts work together to make Washington bigger and more profitable. That's a risk, and the World Bank is part of that. It's headquartered and centered in Washington. One thing I learned, Tom, was how hard it is to get any other country to do the right thing. It's just as hard outside the U.S. as in the U.S. So if you take Nigeria, why is this oil-rich country so poor? They've got a huge extreme poverty rate. Why is that? Because the government takes all the profits from oil and wastes it.
This is such a better Malpass than the World Bank, where you had 8 people standing around looking at every word. David Malpass is public service to the nation and the world with the World Bank, and involved in politics as well. I'm looking here at the intellectual combine over at Schwab, and I got S&P tech sector's forward price to sales ratio pushing up against this all-time high. Thank you, Kevin Gordon, for that wisdom. Joining us now, Ann Sonders. There's a privilege of working with Kevin Gordon. Ann, you do the best charts you and Yuri and Timmer do the best charts on Twitter today. What's your most important chart that you're putting out for Schwab right now?
Oh boy, that's a good question. There's so many. I think it's labor market data. I think it's claims, continuing claims, what we see in the monthly jobs report. I think that's the needle mover in terms of Fed policy.
Can you correlate Target's earnings this morning and very great disappointment on revenue? Can you coordinate that, correlate that, I should say, with the labor market?
Well, I don't cover individual stocks, including not covering Target, but you have the earnings story this quarter at the bottom line level has been better than expected. The beat rate, the percent by which companies have beaten, but you've got overall revenue growth down around in line with where inflation is. So it really has exposed the companies that actually do have pricing power and don't have pricing power. In addition, revenue beat rate has been below average. The percent by which companies have beaten on the top line has been below average. So I think this is increasingly yet again a sign of this bifurcation happening, whether it's between nominal and real, high-end consumer and low-end consumer, services versus the goods side, discretionary versus non-discretionary. And I think there's a reason why the consumer discretionary sector has been performing poorly, is we're now seeing more than just cracks in the facade of the consumer.
So, Ann, I guess one of the key issues here are the earnings that we have seen. And again, we're going to another big one after the close tonight with NVIDIA. Have they been strong enough to support this big move up in equity valuations that we've seen since October?
Well, you've got about, I think the blended growth rate right now is 11%. That's inclusive of the companies that have yet to report. And that is well better than what was expected at the beginning of reporting season. That's getting there, but I think earnings do need to continue to surprise on the upside, because last year's strength in the market was all multiple expansion because you didn't have much in the way of earnings growth. So I think the earnings do have to play catch up. Obviously, the report out today is incredibly important, not just psychologically, which we know it's going to be important psychologically, but if you look at the overall tech sector, the earnings growth rate drops from about 24% or so, 23, 24% down to less than 11, excluding what is expected for NVIDIA. So it is obviously the poster child, but that has been the support for the tech sector, which is the overall support for a higher valuation level. If you look around the world, one of the mistakes that investors make is they do valuation comps country to country, region to region, without taking into consideration what are the underlying drivers of the local economy. And when you have more of an information tech-based economy, that is support of all else equal of a higher valuation backdrop. The last thing I'd say is inflation as a backdrop for valuations is important. Maybe not coincidentally, the sweet spot in terms of historical valuations being supported at a higher level has been in and around that 2% inflation zone. We're obviously not there yet, even if we're directionally heading in the right way.
Lizanne, what are some of the sectors that screen well for you and your team here?
Yeah, so we relaunched Schwab Sector Views at the beginning of the year after a 2-year hiatus for a whole variety of reasons. And we haven't had any change in terms of the sectors on which we have outperform ratings since the beginning of the year. So it's financials, materials, and energy. Obviously, a very cyclical bias in terms of where our outperforms are. The two underperforms are REITs, maybe no surprise given the problems in commercial real estate, and then, as we already touched on, consumer discretionary. The rest are in that neutral category.
Liz, how do you manage a bull market across the kitchen table? Sell in May and go away. That didn't work out. There was a great chart. I don't know if young Gordon had it at Schwab, but it's like we're getting back to 2006 ownership of equities, 60-some%, whatever the number is. It's really great. We're all in on this market. How do you manage the emotion of a bull market on a kitchen table over a beverage of your choice?
Tom, that's an interesting question because household exposure to equities is a behavioral measure of sentiment, for lack of a better word. But you've got attitudinal measures of sentiment. And one of the interesting things that has occurred in the last couple of years, really in this sort of post-COVID bear market cycle, is that you get much bigger swings in the attitudinal measures of sentiment than you do in the behavioral measures. So if you look at just AAII, American Association of Individual Investors, you can see pretty big moves in a very short period of time, up in percentage of bulls, up in percentage of bears, depending on the near-term wiggles in the market, but you haven't seen much movement in that invested exposure piece of it. So I think that there is some complacency out there as measured by the behavioral measures, but those attitudinal measures are swinging much more quickly in this environment.
What do you see at Schwab? What is cash doing?
Well, I think for a lot of investors, cash is earning income. So you've got income and fixed income again. That's why I push back on this notion that the $6 trillion in money market funds is just sitting there ripe to jump into the equity market. I think that's probably fairly sticky. And I think it's great comfort, particularly for more conservative or older investors that had to stretch for yield and move out the risk spectrum, to not have to do that. You've got implications for within the equity side, especially areas like dividend stocks that will increase in attractiveness depending on what yields are doing. But I think a lot of that sort of cash money is fairly sticky because it's earning a nice yield at this point.
Lizanne, it was great having your assistant Kevin Gordon on, but you failed in one thing.
Oh, he's more than that, but he is. And I loved that interview. Well done, Tom.
We were coming out of it, and I said to him casually, I said, let's play some Nickelback. He didn't know who Nickelback was. The young lad did not know who Nickelback was.
I taught him well, Tom. He knows who Led Zeppelin is. So
he better know that if he wants to cash the paycheck. Liz Ann Sonders, working with the great Kevin Gordon at Schwab. Thank you so much. I can't say enough. Joining us now, the worst job in Bloomberg. She has to sort through the 400 polls that are coming out before the first Tuesday of November. Laura Davison's deputy U.S. politics team lead in poll talent with Bloomberg News. I'm already polled out, Laura. In my summary of all the different polls, is the White House is making very clear they don't believe the polls. Do I have that right?
Yes, Biden has repeatedly said that he thinks that the polls are undercutting him and underselling his popularity. Of course, polls are a snapshot in time and, do have a margin in error and are just a tool that can tell us direction. But several polls, including, the month that we've done this Bloomberg Morning Consult poll, as well as others, have shown that Trump consistently leads him in key states. Is there a history that supports President Biden that the polls get it wrong and he'll do better than good the first Tuesday of November? So in 2022, in the midterms, there was this big red wave projected, and that didn't materialize. So that is sort of what Biden is basing his hanging his hat on there of saying, look, the polls said we were going to lose before, and we didn't end up, kind of with quite the shellacking we were expecting. But, this is, a presidential polling is different. It is a little bit more precise than, congressional polling, where you've got, a bunch of different polls, across, hundreds of races. But this is a consistent sign and a worrying sign for the Biden campaign that he... We're going to take a poll right now, Laura. Lisa Mateo, jump in here. Lisa Mateo, have you ever been called to do a political poll?
Never.
Laura Davison, have you ever been called to do a political poll? Quite frequently, actually.
Really? Okay.
I can't because I'm a journalist, but I get these calls, probably 5 or 6 times over the past year.
I've never been called.
Me
Paul?
Nope, never, thankfully. They know better.
What is it?
I don't pick up the phone unless I know who's calling me. So, Laura, on this morning consult poll, I know we've been doing it on a fairly consistent basis here. What are the latest highlights from this poll for us? So what this shows is that this is going to be a close race. Biden is performing best in these blue wall states. So that's, Michigan, Wisconsin, Pennsylvania. He's roughly tied there with Trump. It's in these southern states. Arizona has been one where he's been trailing Trump. Georgia, North Carolina. Nevada has been a real wild card. Last month it showed that Biden was down, almost 10 percentage points. This month it shows that they're nearly tied. So Nevada will be a weird one to watch. It's a very transient state. It's one that Democrats have consistently done well in, but, it's really sort of a who knows this time. Well, here's the one that kind of got my attention from the Bloomberg reporting. Half of swing state voters fear violence around the U.S. election. Give us more on that. So this was a little, very much a sobering realization here in the poll of that half of voters are expecting violence around the election. I think we've already seen that, those fears be fueled with the campus protest in recent weeks, as well as, sort of all of this, the specter of 1968 that really hangs over the Democratic convention that'll be in Chicago later this summer. So this is, clearly something that's on voters' minds. Obviously, January 6th, last election was not completely free from violence. There are also voters are concerned about misinformation. More than half of voters think that there will be misinformation that will interfere with the election. Also, foreign interference. That's a little bit a smaller percentage worry about that, but that's also on the mind of voters. What are we hearing or seeing in the polling about former President Trump and his trial in New York City? Is that having any impact? And then I guess the other pending litigation as well. Is that impacting the numbers? So one thing is that voters are not differentiating between the various cases. They're not saying, oh, if one thing happens in the, document case, I feel differently than if it happens in the, the Stormy Daniels hush money case. They sort of lump them all together. But it's clearly on voters' minds. The poll allows us to, ask these open-ended questions where voters can just sort of share their thoughts. The legal case, is one of the top issues that people referenced in these open-ended questions. Of course, this was taken, as, Michael Cohen and Stormy Daniels were on the stand. So this was, clearly top of mind in the news as well. But it looks like, we asked a specific question a couple months ago, looking at, if Trump is convicted, does that change your opinion? And it did. Laura, is there a history? This is sort of like a Wendy Schiller question up at Brown. Do the candidates poll to figure out who the most efficacious VP candidate is? Do they do a lot of work before a given presidential candidate says this is the one for VP? So a traditional
presidential campaign does do a lot of work and polling. We also did our own polling here on these VP candidates that Trump is looking at. We don't have any indication that the Trump campaign is doing their own polling. Trump tends to go more on his gut and making sure that these people are going to be loyal to him. But what we found is that a lot of the people that he's looking at, people like J.D. Vance, the senator from Ohio, Doug Burgum, the governor of North Dakota, nobody knows who they are, particularly in the swing states. So this is going to be
young Davison. I remember the moment where Bush selected Dan Quayle.
Oh boy!
It was across a trading floor. The profanity that came out, Lord Davison, across Dan who? No one knew, and it was not appropriate for radio. I mean, Laura, does it really matter anymore? The VP candidate?
When you have a candidate like Trump who has basically 100% name ID, I'm not sure that the VP candidate is going to sway him one way or going to sway voters one way or another. Trump has talked about potentially picking a woman, picking a person of color that could potentially help him with those groups. Although increasingly the chatter is picking someone who can help him raise money.
Okay, great brief. Lord Davison, thank you so much. We make jokes about it, but she's just killing it down in Washington in the depths, getting towards this national election. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.